Hello everybody, welcome back to the old stream on a Friday night, and we are getting very close to the end of the month, so I'm pretty sure I'll be able to achieve all the streams that I set out to achieve, but next month I know it'll definitely be different. Right, so let's get set up with a bit of a broad overview of what's been going on. So S&P is actually up 1.2% today. Interesting. Okay, fair enough. Bouncing more or less from that 200 simple and exponential moving average, the golden cross retest. It is what it is, I suppose. There's nothing really much more to say than that. I still believe that this is nothing more than a lower high. You're going to get rejected and come back down, but we can't deny the fact that we gapped up today and sort of hit that Bollinger Band centre on the daily. Fair enough. Fair enough. Until we see a closure above it on the daily, I would expect this to just be another area to get rejected from and then move back down to make a lower low and so on and so on. We'll have a think about the Dixie very briefly. So yeah, standard nice move actually today. Exactly as expected. So we've moved back down into this area, this 105.3, 105.4. Bollinger Band centre, horizontal area of significance. We're getting a bit of a move on it today. It's not quite broken out though, because you can see that there is a resistance of that. It was a bit more clear on the daily, but the 4 hourly you can see it. So it's a descending triangle. Whichever way it wants to go, breakout confirmation is how you can tell if it's going to go. But regardless of the breakout confirmation, we can see a trend, and the trend is one of an uptrend, and it's one of a strong uptrend on 4 hourly, on the daily, and on the weekly. It's all there. So I mean, we have to assume a breakout is rather more likely than a breakdown. But you know, even if you were to break down 103.3, massive area for a bounce. But I still think it's more likely to break out than break down. The reason I think this is because oil is still toying with the idea of breaking out. Well, I mean, it is breaking out basically. The problem with oil, trading oil at these prices, at these higher prices, rather than the one that we got down at the weekly lows, these lows, this is where the trades were really supposed to take place from. Now, I still think that there's more to go on oil, but oil can wash out. You can get washed out on oil very quickly, and you know what I mean by that is you can see it drop 4% in a day, just like you'd see that sort of thing on crypto. It's a liquidation event, really, and so if you are looking to enter into oil in anticipation for the move up into the 90s, then I would be looking for a washout trade first. You see a move down 4, 5, 6%, probably that would be the one to buy it from. If you could get down to the $80 zone, maybe even into the $77, $78 zone, then that would probably be the next area to try it from. If that doesn't happen, then you just have to accept you missed it. I'm out of this trade, by the way. I entered in here and I'm out already, so I've got no skin in the game. I've made my trade. I wanted to leave some, but it had gone on for a while. This is a long trade, a couple of months I was waiting for that to materialize, and I just wanted to realize that profit, you know. But yeah, the reason I brought oil up is that oil prices go higher, inflation goes higher, CPI goes higher, rate cuts are probably a no-go, which means either static rates or maybe even a rate hike, which sounds crazy, but that's what they're there for. And then later on down the line, we get rate cuts. Hopefully, maybe, who knows. But all I'm pointing towards here is the realistic concept of continuous consolidation. And although that the S&P has bounced today, we see that move up today. And again, the weekly, this is the move that we were expecting last week, wasn't it? Remember, exactly this time last week, we were saying, right, markets probably resume as usual here because we've got ourselves a Bollinger Band retest. So the long-term investors will want to try that one. That's a good area. We also had the 4 hourly golden cross retest, which was here as well. All of this basically exactly what you would expect to see for a bounce. But really, I'm looking at the daily as the intermediate sort of voice of reason now, where I'm thinking a lower high at this point now. So we've had the bounce, the markets did resume, and now I think it's time to reject again. And again, it's Friday, so this leads crypto into a bit of a random area. You know, what's crypto going to do during this period? Well, what crypto's done today is it's gone up and gone down and then it's trying to move back up again. So it's still very much consistent with the downtrend. Death cross retest down to support, trying to bounce up. Really, it's all about the 64, 65 and a half $1,000 zone for the resistance. And if you take ourselves over to a daily, that area is all emphasised by a Bollinger Band just a little higher at $66,000. We've been rejected 1, 2, 3 times in a row now. So the odds are in favour of further downside. It doesn't necessarily mean that it has to happen, but the odds do point to further downside. So whether that happens over the weekend, I'm not so sure. And invalidation, which is an important thing to recognise, would be candle body closures closer to $67,000 on a daily, way above the moving averages that we care about. It's a bit glitchy on this today. I've had my computer open for ages, haven't shut it down, so maybe the stream is a little glitchy. It's a quiet stream tonight, so we'll get stuck in. I've got some things from members who left comments on the Patreon itself, not Tom, T-O-N. So we'll look at those and then we'll go into some of these that you've asked for. Right, so I've been asked to look at this one, a KuCoin gem. In all fairness, on a daily, it's come down to a 50 exponential, which is part of a golden cross retest. This one has really hammered. This one's gone crazy. I mean, there's your start point. But really, from the consolidation lows, $1, it did 500%. It's still up significantly, 350% from that low. We had a lot of bearish divergence. This one basically nailed it on the last one, and we came down. So what you're looking for is to hope that this holds. So, hope isn't anything that we go by. So the next best thing to hope would be moving from a daily to a 4-hourly to see how that's faring. And although the death cross hasn't happened, it looks quite aggressive. There's been a little bit of bullish divergence here, which led to this move, which got rejected quite early on. And so again, validation, invalidation. What we're talking about really is closures above $5.65, $5.66, which will be above the 4-hourly, 200 exponential, the 20 and the 21 simple. So with that, we'll be looking for closures above that on a 4-hourly that might give us the ability to rally back up again. And I actually mean that. This could be V-shaped recovery because it's small. It's not very old. I imagine it's quite low cap. It's obviously done a big rally. I would probably leave it alone. I don't think this is a comfortable level to buy it from, although it does seem to respect that 50 exponential, almost perfectly. So you could take it on face value. And if that was the case, maybe the top target would be around 619, 620. But in order to make that trade feel a bit more comfortable, you'd want the 4-hourly to make sure that we're above these areas and give you more likely chance of continuing. The reason I say that, Bollinger Band strategy, and it's the same with any moving average, but Bollinger Band specifically, means that if you're in the lower portion of the band, you're more likely to stay below it. If you're in the upper portion, obviously more likely to stay in the upper portion. We're at the lower portion here, and the rejection is 553. 200 exponentials at 560, so you want to get above both of those, really, close above both of those on the 4-hourly, and you might see a move up into that $620 zone. So we'll leave it like that for this coin, really. Momentum is neither here nor there. This has got a big uptrend, really. It's only fair for it to want to consolidate further. The market is going to drive it. There's very little chance that this is going to move outside of the general trend of Bitcoin and crypto and stocks, which I think are all basically ready to reject. So remember, last week we were talking about how markets should start to resume to the upside again, and we've seen that. We're about to close the S&P. Like I say, on that weekly, you can see that now. So again, it's not a massive move, is it? It's not huge. But you see that. This is last Friday. I said, look, we're probably going to bounce. We've bounced 3%. I know it's nothing, but it's all part of the general trend of markets. And if we're going to get rejected now, it basically is going to be now. So it's not for anyone to take a short position on a Friday. That's kind of madness. But if you were to do it, you might be getting your foot in the door for some further downside next week. Just like if you were to have taken a long position on last Friday, you would have, got your foot in the door for what is now a closure at this stage, a week later. They're not big moves. I'm not suggesting anybody trade the S&P. I'm not saying this is anything anybody should do. We look at it as a broad overview of how markets are going to behave. And this is how markets have behaved. And I expect markets to continue to follow this general vibe. Just give me 1 second. I've just got to respond to a text. Hang on. So sorry about this. It's very busy these days. Right, sorry about that. Right, let's move on to the next one that I was asked to look at, which was Uni. I don't know why I'm looking at it on Trading View, but we're here now. Jesus Christ, Rex City or what? So this one moved all the way up to what, $17? We're now back down to 7. We've lost $10. That's a huge pullback when you put it like that. Down to a 200 simple moving average, which to be fair is the last stand on this one. Hang on a second. I'm really sorry about this. I'm just getting a lot of text at the moment. Right, so so if we're going to hold anywhere, this would be where you'd think about holding. But given the fact that we've come all the way down to this level, and all markets, in my opinion, look like they want to come down a little bit further, I'd probably write this off as a moving average. And looking back at it historically, it's not particularly relevant. It's more just of a guide, so I wouldn't look at this as anything specific. The 200 exponential seems more likely to be a realistic thing. We've had supports over here, but we've also had rejection here. So I actually look at this as something that wants to come down further. So we've had a fair bit of support down here at 683 for whatever reason. Maybe we can extend that over to see if there's relevance to that area. There's two tops. There's another top. A little bit of price action. It's a bit crazy to be fair, but we'll take it on face value. It does exist at that level, and that is 683. Below that, we could also entertain this, but I also think that that's basically a moving average. So really, it's time to start looking at the weekly on something like this to see where we're going. So that white line now seems a bit more obvious that there was an accumulation of some description taking place, but the fact that it was all been given back is pretty hard to see now. 50 exponential at the moment being held. It's not enough for me. There was a pump signal that was generated on this weekly, and it's definitely faded out now. Massively faded. So I would be looking at this as maybe an opportunity, looking for moving forward when we start to go down below 670, closer to $5 flat, really, back into what is an accumulation zone. I'd say an accumulation zone. This is a big ripping roar up, and now it's basically giving it all back. I warned, haven't I, quite a lot of times throughout this year, really, about don't get used to high prices. Altcoins go up fast, they also come down fast, and this is a good example of that. If we come back down to square one, it's only an opportunity because it will likely go back up again. We have no reason to assume otherwise. We're all happy to continue to trade crypto. We're all sitting down waiting for the consolidation. And if I was to put a time limit on the consolidation, it's an S&P type vibe, and the S&P wants to come down to at least, I think, a very good support like 4,700. So we're still at 5,100 at the moment. So a fair bit more to go. And to put a time on that is difficult, especially when we've got things like oil, which are likely to cause CPI next month and especially the month after that higher and higher. So the consolidation can take place throughout the whole summer, which means that looking at these lower targets, something along the lines of $4.80 seems excuse me, completely reasonable. And maybe even lower still, maybe down to 4 and below. Let's take a look at the 4 hourly again. Let's see if we've got any signs of reversal in the short term. No, we don't. We don't. So you could probably try a little scalpy trade down here at 684, and that would be nothing more than a small bounce. If you're looking to enter into this for the long term, or a larger, more significant trade, it's better to wait it out, which is my thoughts across the board for the market. Finally, for this this we'll have a look at Mana. So we'll start on the weekly and move back. So Mana looks awful. It looks awful on the weekly. It looks terrible. It's below all moving averages and continuing to go down. So let's have a look at the daily then. Daily is breaking down just like a lot of altcoins look like this. We're below moving averages. No death cross yet, but we will get it. Don't you worry about it. I'm sure we'll get it. Similar to what we just saw with Uni, there's some area down here, and for this one it's 42 cents. You might get another bounce around there. It would be a dead cat bounce, if anything, moving up to what I think would be a 20 moving average, which is currently at 49 cents. I think it's more likely to break down given the fact that the weekly looks so awful. 4 hour is not going to look good, I know. So yeah, death cross retest over here, smash back down. Sort of a pretty shitty looking rally, bit of bullish divergence, but nothing really. So I think we might get another bounce around 42 cents, but personally I'd leave it. I think this one's probably best to leave alone for a while. This is a horrendous move, and I think with any chart that looks like this, because we see these sort of things all the time. So there's your bull market, here's your bull market, here's your bear market, and basically it's been pretty terrible ever since. And this is the sort of chart, just based on chart structure, and what you would notice on a chart that looks like this. Lots of people will be wrecked from here. They might even still be holding on. You'll see these rallies, they'll have a bit of hope. You go back down to where you started from. Another rally, a little bit of hope. If we consolidate and we come back down here and lower, what I think you'll see would be one last big dump, which is like the last little bit of sellers, and that marks the low, a significant low. So obviously, if we go to Mana's history, it's probably better to go onto a log scale, but I hate going on the log scales because it messes up everything with all these indicators. I should really take the Bollinger Bands off, or just extend it so we can see the log scale a bit better. Obviously, there's a lot more price action down here that didn't appear relevant until you put it on a log scale. So if that's the case, you can think about this, which is 10 cents. We're still at 45 cents, right? 10 cents is, you know, it's a big ask for it to come down to 10 cents, but it could, right? Or start to go down into this no man's land, because, you know, we're holding here, which is fine for the moment. You lose this area, the increments that you drop down to is 23 cents. Again, we're looking at it on a weekly, so these are like big gaps. 23 cents is this area here where there's a fair few candle bodies. You lose that, you go down to 15.5 cents. Again, the wick and the candle bodies. And if you lose that, then it is down to 10 cents. And look, you could even lose that too. I don't think that's going to be the case, because these are huge drops if that was to happen. We're talking the first one of 40, then to 50, then a further 65, and then a max of another 77. I don't really think looking at this chart is something to be excited about. It just looks like wrecked city. And I don't like the way it looks at all. I think we should leave that one alone. Right, good evening, CC. Can we have a look at Bepro and CHZ? Wow, yeah, we'll do it. We'll definitely do it. USDT. Right, so finally, something that doesn't look particularly too bad, and who would have thought it? It's Bepro. Bepro is holding something. 21 exponential, 20 simple on the weekly. So that, you know, unlike Mana and a few of these others that we've seen dangling way below all these, this one's actually still holding. Now, it can give a false sense of security, obviously, but based on the weekly so far, not all that bad. High, low, higher high, higher low, not too bad. Again, false sense of security. Let's not get too crazy. Wow. Okay, so again, you know, if this was a raging bull market right now, this is a must-have buy, really. You definitely want to try it. So you've had a up, down, up, golden cross retest, basically, on the 200 exponential. All the zeros, 960. So not too far away from where we are right now. And that's where you'd expect a V-shaped recovery. Based on what we see, I'd go for the majority of the wicks over here. That's a massive move. It's a good 40% move, really. Less than that from where we are right now. But yeah, about 40% move, 43% move. Yeah, it's hard to give it the green light because of the nature of what I think the market's going to do. But yeah, the weekly and the daily actually point to a move like that. The 4 hourly is not the same, so you're going to see a lot of this across the board, really. Contradiction of time frames, really. And the 4 hourly is doing what a lot of these charts are doing, including Bitcoin, obviously, which is death cross retests on 4 hourlies. So again, trying to think about the market as one big giant financial machine getting rejected right now and looking to have a red week next week. As much as Bepro has the opportunity to bounce to the tune of maybe 40%, I still would be hesitant to say that that's what it's actually going to do. I'll be looking at it to keep going down. So if we think about this for what would be a long-term position, if we're going to keep going down, we're going to lose those areas. Where we're going to come down to? If you lose this area, the next area is there. Well, all the zeros, 955. On a horizontal basis, probably we're looking for these lows to get scraped again, which is a huge move down. towards all the zeros. 644. We can put a little line in there. Now, BetPro is one of those sort of shit coins that we love, because if it does move, it'll move significant. I hate these charts when they do this. So, you know, this is what the chart was capable of before. It has done massive moves. It's probably capable of it again, but I remember it at the time. This move was a Reddit-driven type thing. It wasn't anything other than that. It was a Reddit-driven thing. And so because of the fact that it was driven by, what do you call it? A self-fulfilling advertising pump group of some description, it might not ever see those highs again. The volume that came into it was significant, and ever since the volume has been pathetic. But you could buy it if you wanted to. I think it's one of those coins that we should just own just for fun, just to remind us what crypto is all about, which is normally wrecked city. But right this very moment in time, the weekly and the daily are at support. It's only the 4 hour that's not, and so if Bitcoin moves up, this one's in a good position to continue with its higher high, higher low structure. It's only the 4 hour that's contradicting that, but I look at everything from a broader horizon, and I think that buying BetPro at this portion in the market is kind of crazy, and I wouldn't suggest it's a great idea. I don't know why COS is moving. I had a little look at that while I was waiting for the stream to start. CHZ USDT. Okay. I was going to say we've got a little green, but we don't. Right, so daily, rejection on the Bollinger Band Center. S&P's doing that, so this is also doing it. Support on the 200 simple. Okay, fair enough. Positive cross, which is good. Not had a breakout of momentum from what I can see with the naked eye. Let's have a look a bit closer. Probably not broken out of that. So we might be looking for a double breakout, and that would be one of momentum and on price action. The MACD's made its positive cross with 3 or 4 histogram ticks on this daily. So the validation of this trade will be a daily closure above that Bollinger Band Center. Let's have a look at the 4 hourly then, because the daily's not too bad. Death cross retest, just like Bitcoin has. Negative cross, snaking towards the 0 point and below a Bollinger Band. So again, you want to see the breakout on the daily, like I said, from a momentum and price action perspective. Otherwise, what you're doing here is buying support. Buying resistance. So you don't buy resistance, you short a resistance. And I'm not saying you should short this, but the S&P is doing this, and Bitcoin's almost doing this, and CHZ is doing this also. So that looks like it's getting ready to reject, in all fairness. Support will be down here, back at 10 cents again. If you lose 10 cents, you lose the plot. And you are really starting to come back down significantly. So it's interesting that candle body from this peak is exactly that wick, which might give you an educated guess that we will end up back down at that price again, and maybe lower, but definitely that price again. So hand on heart, I don't really know, but I'm looking at everything from a full market perspective, but I think it's reasonable to assume everything's going to come down, and this is at a resistance right now. So if there was a place for it to become rejected from and then make its way back down to this low and lower, it would be now. And so that is where I would think, that's what I think is about to happen. I think a rejection is about to happen, or it's already happening. Bitcoin dominance, XRP, PundiX. Okay. Bitcoin dominance. Right, so the Bitcoin dominance. So the weekly, well, you've got that drive of bearish divergence. It's only one. That's why I'm hoping for all this chaos to kick in. We've got a negative cross on the itchy cloud, but that's nothing on its own. It just means that this portion of the pump is certainly out of the question now. The daily does look like it wants to come down a little further, to be honest with you. That is true. So over the weekend we might see some green. You might actually see it, especially with altcoins. You might actually see that, because the S&P is not going to trade over the weekend, is it? We're going to have to wait another weekend until next Monday for that rejection to see if it's got legs. I think it has, which might mean that we have a bit of a green Saturday, then maybe a green Sunday, and then it starts to get faded into Sunday afternoon, evening, night, red, open red, Monday red, 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 red. And by that I don't mean massive crash, I just mean general downtrending red, you know. But the dominance chart also looks red. So interpret that how you will. The general interpretation of that would be that altcoins will be better than, as a broad overview, but altcoins should perform better than Bitcoin generally. So if we do find a very strong setup for an altcoin, okay, fair enough, we'll give it the benefit of the doubt. But so far, I've not really seen one that I'd be like, yes, definitely want to stick my neck out and my balls out for that trade. So the 4 hourly is different because the 4 hourly has already done a golden cross retest. And to be fair with you, I know we're back down below a Bollinger Band, but it's if it's going to bounce, it'll bounce around here. We're still consolidating. And consolidations, when they end with an uptrend. And I think that's how the dominance chart's going to go. I think it will end in an uptrend. We're just still consolidating, giving a bit of a false sense of security. Because if you were to take off everything, excuse me, if I was to take off absolutely everything at all, hide all, what are you looking at? You're looking at a consolidation. That's all you're looking at. So no moving averages anymore, no nothing. All we've got is just this. You're like, all right, fine, that's consolidating. Where's it going to consolidate down to? Well, you know, it's up to you where it comes down to, but it looks to me like these areas, the breakout, the 200 exponential, the 200 simple, that's where it'll come down to, and that's where the bottom will be. So we'll get rid of that because we don't need it, because we've got moving averages that seem relevant as well. So I'm looking for a little bit more consolidation, just a tiny smidgen, and then a breakout, which could be in the form of Bitcoin up, altcoins left behind, or Bitcoin down, altcoins completely, you know, smashed, wreck city. So that's what I think is the most likely. It's just a consolidation that we're seeing now. When that comes to an end, it'll end in tears for altcoins one way or another. Now, it doesn't mean that we can't have a bit of green over the weekend. XRP and PundiX. We can't have a stream without XRP, can we now? 53 cents. That's not too bad, is it? 52.70, right? Okay, fair enough. So again, another chart which is bearish, really. Death cross with a retest on it already, and below all moving averages. Looking for another closure, perhaps below this 10 exponential. So again, not a good look for it. I still think this one wants to keep coming down. As much as I love XRP, I still think it wants to come down. I should let it do that if that's the case. Invalidation was going to be a bit of a bigger move on this one, because you're going to have to really get above the golden cross. I mean the death cross here. Back up to 58 cents. We had a death cross retest again over here. So there's this simple moving average, exponential here, 56 and down, and we're trying to, wanting to hopefully break above 53.2 cents. It might do it, to be honest with you. And the only reason I say that is that the histogram is ticking up and it's close to a 0 point. We could think about this as a miniature consolidation of its own. So there's your consolidation. It's basically a Bollinger Band anyway. And you could do the same thing over here with momentum. And momentum is, well, maybe breaking out as well. So you'll be looking for, in the very short term, a closure above about 53.5 cents. On a 4 hourly. You get that, you might be looking for another move up to 56, maybe 58 at best. So it's not the worst thing you've ever seen, but you're waiting for a trade to materialize. I can't stress it enough. As much as there was a couple of charts we've looked at similar in a way, where you're pushing a resistance and you're like, all right, look, resistances break, obviously, otherwise we would never get higher prices. So eventually resistances break. But you don't buy a resistance. You can buy a breakout of a resistance once you've seen a closure and you've looked at momentum and you've monitored the overall environment and you think it's acceptable to call it an official breakout. But right now it's just consolidating and we're at a resistance, so you don't buy it. Just because this looks like it wants to break out, it's not enough. Similar with this. It looks like it wants to break out, it's not enough. So if you get all three of them break out, then all your target is going to be up to 56 cents again, which is a major resistance anyway. And it's not enough really to think of about an actual trade. So I prefer further downside across the board. I think that's most likely. I think we're going to move into a red week. I've seen a few popular Twitter people saying, "Oh, altcoins are going to rally. They're just about ready to rally. Everything amazing about altcoins. They're going to rally hard next week." You just don't know if people are saying things because they think that, or if they're saying things because they need the engagement to remain popular, or I don't know. You just never know really with social media. What people's motives actually are. Are they telling the truth? because a tweet like that, if they believe it, then that's fine. But if they're saying it and people who don't know how to trade or don't understand anything, all they go by is popular accounts saying stuff like that, then they're just going to buy blindly anyway. I mean, I got skin in the game, you know, I'm a big hodler, but I'm not interested in making any of these little measly, pathetic trades. I'm waiting for the much bigger ones later on. And if I end up not being able to get lower prices, it's no big deal. At least the environment will have changed. I can take part in the trend. But personally, at the moment, there's nothing other than a downtrend at the moment, and I don't want to take part in that. I want lower prices if we're going to keep downtrending, and if we move up, well, I'll take part in an uptrend, because obviously it's easier to make money out of that. Let's have a look at PundiX. So all I'm trying to put across to you is all about safety, risk to reward. You know me, I'm always about risk. That is the most part what I try to stress to everybody. You know, we can have setups, but what's the risk? If the risk is too high and the setup is still good, it's not worth taking that risk. Trading is risk. Buying any asset is risk. If you want to incur risk, that's fine. You can't make money without it. But too much risk, it's not worth it. And I think at the moment, the environment generally overall offers too much risk, because every altcoin, you have to think about Bitcoin, you have to think about S&P, you have to think about stocks in general, you have to think about commodity prices, which impact Forex prices, which impact everything. So at the moment, the environment is not a pleasant one for upside, at least anyway. So that's my main take home from looking at all markets and sort of digesting it and shitting it out. And when I look at that financial turd that I've generated, and it says, all right, it's too risky at the moment for any kind of potential upside. Little tiny baby trades to scalp, you know, maybe 5% from here is not enough compared to what we start to measure down, and the big drawdowns, 20, maybe even 40 or more % down. Nah, it's not worth the risk, is it? That is absolutely, it's the opposite of risk to reward. It's horrendous risk. But it's also why I always say about invalidation. This is my particular bias right now, as you're more than aware. But I'm happy to be wrong, because it means I can start buying again, even if they are from higher prices. It doesn't really matter to me. I'm all about chasing percents. You know, it's the hodl bags where you're thinking about buying low and holding for prolonged periods of time and selling at a much greater several 100% gains. Trading is all about grabbing percents, getting what you can out of the market, and at the moment the market doesn't look like it wants to offer much to me. Right, so PundiX, we're actually holding up okay, around the 70s, 60, yeah, almost 70 cents, so that's not too bad. It's actually a good looking chart, so this is one of those charts that actually does look actually okay. Rejection again today from this rough area, 73, and the consolidation of momentum is still in play, so again, invalidation. We've had the golden cross retest, huge big move up, move back down to the 50, rejection once again. If we can close above 73, or higher really, 75 we'll call it, you get a breakout of momentum, you'll see this one move straight up to $1, I reckon. I think that is the case. Now this is good for me, because obviously I'll be buying, bought this down in the 30s, and I'm happy to hold it. I'm used to seeing PundiX do these sort of things, you know, so I'm used to this, and I'm used to this. But this one sort of does feel and look a little different. It's definitely different to this, and basically this. Since we had this uptrend beginning over here, it has started to change its behaviour some. But is it powerful enough to change its behaviour at the same time as the rest of the market pull back? I doubt it. You're looking to buy into this long term, I hear you say. 55 cents is going to be the first area. This horizontal, this 20 weekly moving average. 55 cents and below is going to be time to stock up on PundiX, which I strongly believe is going to make its way beyond these candles over here. It sounds crazy. I believe it to be true. I think this will be a great hodl for anybody, but not from this exact price, from lower. 55 and below, that's fine. 10, maybe 20x on that one. Right. Dixie, so we've done Dixie. How are you, CC? Please have a look for me again at VELO. So this was one of those coins which was like crazy bullish, I think, wasn't it? That's, if I'm thinking of the right one, and then it's consolidating. Right. Okay, let's zoom out and start with a weekly. So what are we saying here? So the wick usually tells a story, and the money flow index is sitting at 88, so it can definitely go higher. I think the last time we looked at this, we assumed it was going to go higher as well, and it looks like it. Well, when were we today? We did a stream on Wednesday, so Friday, Thursday, Wednesday. So we must do it. I mean, we've wicked again, haven't we? But like 3 wicks in a row, and now we're pulling back. So yeah, this one does look like it has had enough, because previously you get these moves in a consolidation, move up consolidation, 3 wicks in a row consolidation. So I'm not so sure what this line here is going to do for us. I don't think it's quite enough. Let's have a look at how it's behaved with moving averages. 10 exponential has some relevance. There is a continuation of a trend signal here. Blue still above the red, cheeky span far above price action. So I think this one's still in an uptrend. If you get a pullback, so we're 9% down today, so that's pretty significant. The 10 exponential might offer you the first buyback on this one for a bounce, and it'd just be a bounce. I won't go mad on it. Remember, you're dealing with a risky, volatile beast here. First real opportunity is probably going to be around 1.8 cents, we'll call it, just above that 10 exponential, kind of around this horizontal. But a better one, more substantial one would be a center of the Bollinger Band on the daily, which, to be honest with you, didn't really have too much relevance moving up. So maybe we'll just discount that. Considering how big it is, let's have a look at the weekly. Right, so the weekly seem to enjoy the weekly 10 exponential, which is all the way down here at 1.1 cent. It is a difficult one to call, really, because it's been so bullish that if it does decide to curl over, it'll be hard. It'll be hard work. We've got 200 exponential down here, which has seen some relevant price action and support on the 4-hourly, coming in at a horizontal, which is all the way down here at 1.28 cent. I would leave it alone at this point now. I think it's probably done. There's enough warning signs on it, and obviously we're coming down a lot now. And if you wanted to buy it back from a lower area, yeah, I'd probably leave it until we see, towards the 1.2, 1.3 cent zone, where you might get a bounce on it, really. So that's my take on it. I think it's too risky to play. I think it's way too risky to try and trade that. But mate, the overall view of the markets are one of consolidation, and I see consolidation everywhere I look, really. It's only the Dixie that wants to move up, and the dominance chart that wants to move up. Everything else wants to pull back down. Now, one thing I was also looking at generally is there's a lot of money ready to go in. There's still a lot of cash positions that want to get deployed. So the markets, as much as they have moved up, people feel a little left out. They missed out on this consolidation, and they didn't get any of these lows. They certainly didn't get in on this one, which is where I was getting in heavily on all kinds of stocks. I was going crazy around this time. And that's obviously ages ago now. Look, that's like a year ago. And now I've been getting out of the stocks, and I'll be going back in on them again later. Now, there's a lot of people who haven't, and they've missed this entire run, and they want to get back in, and they will buy the dips. And the dips on this chart can be bought, but not this one particularly. I'll be looking for a deeper dip, and my dip is down here. And I think we can use the S&P as one major indicator to whether or not we recover in the summer, which is when S&P moves back down to this point down here, some point in the summer, or if we break down below here. Because if we do break down below this area, it will get really nasty. This area down here is likely to get tagged, which is a huge move down for the S&P. And that's bigger than normal. That's definitely bigger than your average. If you get a pullback on the S&P, you're talking around 8% or so. That's generally what a larger pullback, year on year, decade after decade looks like, around 8%. This one measures down to 10.5% from the peak down to the major support. So this is a more realistic area to get a bounce from anyway. this, more or less this area, maybe a little higher than this if we're going on moving averages specifically. So and again, it's going to take the summer, and this is going to creep up, and it will take us to roughly around 8%, 8.5%, 9% from the peak. So I think this is the best way to look at the market, crypto market as well. It's all part of the major system, isn't it, really, Bitcoin now? And it's important to recognize that actually Bitcoin hasn't, as much as it has moved a lot, it's not moved any more than big tech stocks like Meta. Meta moved massively, right? I just want to put it to you. I just want to show you this, because it's worth recognizing this now. We think crypto as being the be all and end all, the absolute supermassive mega beast that it is. We'll measure it right down from its low all the way down here, and we'll measure it up to here. That's 370% that it's done in over a year. It took over a year to do 370%, right? Which is a fair amount. That's decent. That's a decent move. And let's have a think about Meta. What did Meta do from its low? Again, I'm not saying that anything's better than anything else. I'm just putting something to you now, that just to put things into perspective. So Meta, from its low to its high, did just short of 500%. Now Meta is a huge stock, huge tech stock, massive, absolute behemoth, and it managed to do this, right? It outperformed Bitcoin from its low to its high. We think about Bitcoin as being a powerhouse of gains, right? But actually it's not compared to Meta. Meta, I said to everybody at the time, not at this point, I didn't buy this low, I bought around 160 or thereabouts, I bought around there. So I did all right out of it, did better than I did with Bitcoin, I can tell you. But there's the system. Bitcoin is now part of the system, part of the financial system, and it's no better or worse than anything else. And actually, just looking at Meta, we can think that Bitcoin is bullish because of ETF money, but look what it's done over the last couple of weeks, 21%, and just this week has been horrendous for Meta. That is an 18% pullback in a week. And so that can happen to Bitcoin, and it can happen to altcoins, obviously, we know that. And we see this now on something like Meta. So Meta, I'm just using it as an example. We think Bitcoin is the big mover, big moves up, big moves down. It's not the case. It's not the case. I always use Meta as a good example to people who are really skeptical of crypto and say, but it's just a scam, it's got no value. You buy it and it's just, you're just scamming people by telling them to buy things that you've bought. It's just people getting wrecked. Whoa, slow down. All markets behave the same. They're all the same. There's no difference between them. The only difference, if anything, is market cap, and that's why crypto, like actual crypto shitcoins, go up massively and they come down massively. It's just trading volume and market cap. Now, if we're talking about market cap, you've got Meta here, which is part of it's one of the biggest market caps out there, and it's outperformed Bitcoin on the way up, and it's proven to be volatile on the way down. So let's just think about that for a moment. When we're thinking about Bitcoin and crypto being the be-all and end-all, it's not. It's all part of the system. It's no different to anything else. And if you think that Bitcoin's going to not be able to come back down to 50s, which I think it can easily do that, it's a bit naive to think that when you see Meta just plummet like that in a week. So I'm just trying to give you some perspective here. The S&P wants to come down, and Meta is crashing, and it's only a matter of time, I think, before Bitcoin continues to consolidate. You lose this area on the weekly for Meta, because again, look where we're holding, Bollinger Band Center. You lose this area, it does get a lot worse. And I don't know if anyone recalls, again, you've got to think about what this looked like for Meta. This is horrendous. And again, just comparing it to Bitcoin, you saw a pullback of 77% on Meta here. 77 motherfucking percent. That is a hell of a lot of loss, right? For something like Meta, the be-all and end-all, the mega tech giant that it is, and it pulls back by that. I mean, I can't remember off the top of my head, but is that worse than Bitcoin? So it goes down harder than Bitcoin, bounces up more than Bitcoin. Anyway, I'm just rambling here, but it's worth having perspective on some of these things. That's all I'm saying. Bitcoin is Bitcoin, Meta is Meta, the S&P is the S&P. They're all part of the giant system, the shitsum. Yeah, the shitstum. That doesn't roll off the tongue very well, but you know what I'm talking about. The overall financial machine that we sometimes assume that is more stable than it is. It's not. And the S&P is looking for rejection. Everybody will get rejected with it. The S&P is a good overview of how markets are likely to behave, and we're pushing resistance right now. And if Meta can drop 22% or 18% in a week, Bitcoin can do the same. It underperformed the biggest, or one of the biggest tech giants out there. Is it really worth everything that we've been thought it is to be? So far this cycle, I can tell you now, my trade on Meta did just as good, if not better, than my trade on Bitcoin from a hodl perspective. What does that mean? I don't know. You'll have to think about it. It's up to you. You have to think about that. Right. I mean, it's been a quiet stream, so we'll probably just have to leave it there. I appreciate you've all got better things to do. And to be fair, I think I'm getting poorly again. Bit run down this week, so maybe I'll go and have a lemon sip and have a little rest. But thanks for joining me. I think we should generally sit back and allow for the consolidation to carry on. You see moves up, you see green days, and you feel like you've missed out, but you really haven't. I really don't think you have. I think everything's going to keep coming down slowly and surely and boring you to death. It's the same messages I put on the last stream and the one before that. Have a plan and, allow for that plan to come to fruition. And if it doesn't, have a plan B. And if we start moving up from here and the trend seems real, we can take part in the trend and trade it. If it comes down, excellent. That's the main plan. That's the plan we've had since December. We can see that we've avoided a hell of a lot of losses, haven't we? We've survived. We've not lost hardly anything because we've been so guarded throughout this year. We enjoyed alt season, the majority of the alt season, the majority of the crypto gains. We took profit. We're in cash. Now we can see that slowly but surely prices just keep falling. And you can see on Twitter and other little memes about how everybody else around us is getting wrecked and they're feeling bad because the prices of the portfolios are all going down. Not for us. Not for us. We're more interested in lower prices because we're not teased or enticed by what I would consider high prices at this portion of the cycle, especially if the market, such as S&P, Nasdaq, Dow Jones, all want to continue to consolidate to that average pullback of around 8%. From a peak, and I think that's where we're going, and we're not there yet. We've still got further to run. I think this summer is going to be a red-ish summer. There will be green days, there will be bouncy days. I don't think we're looking at anything special right now, and as far as the Everything Bounce part 1 is concerned, that's already played. We've had that this week. That was the Everything Bounce part 1. We saw it this week. Proof is in the pudding. Last Friday I said we're probably going to bounce. We bounced. It is what it is. Now, I think we're going for the everything drop again. We're going to continue with the consolidation, which will end in a lower low, and maybe we can take part in another everything bounce, but there's not enough evidence to say that we're going to see that right now. If anything, we're going to get a little bit of green this weekend. That's it. If Bitcoin closes above 67,500, then maybe we'll be looking for a new all-time high. If we don't see that, then we're coming down, and we will end up in the 50s, I reckon. That's where we're going, in the 50s, mid to low 50s. Right. Thanks for watching, guys. I hope you have a nice weekend and take it easy.